Look around and you'll see people caught in a loop. They go to school, get a job, work hard, and wait for a raise. The reason many struggle financially is they spend years learning how to work for money, but they never learn how to make money work for them. Robert Kiyosaki challenged this cycle. Through his Rich Dad teachings, he showed millions how actual wealth is built, independent of a standard paycheck. In the next few minutes, we are going to build your personal financial statement together. We'll map exactly where your money enters, and more importantly, where it exits. Putting this map on paper is the mandatory first step. Once you can see your financial blind spots, you can stop living paycheck to paycheck and step off the treadmill. Step 1. Grab a blank piece of paper or open a new spreadsheet. We are going to draw your financial foundation. At the top, draw your income statement. 2 vertical boxes labeled income and expenses. Below that, draw your balance sheet. 2 side-by-side boxes labeled assets and liabilities. Wealthy individuals focus on building the asset column. Everyone else focuses solely on the top income column. If you don't physically separate your daily earnings from your long-term holdings on paper, it is nearly impossible to diagnose why your net worth is standing still. Now, you might be tempted to start listing what you own right away, but hold off before writing anything in that asset box. You have to apply rule number 1. An asset is simply something that puts money into your pocket. A liability is something that takes money out of your pocket. This is where most people get tripped up. A primary residence is usually considered your greatest asset, but because it requires monthly mortgage payments, taxes, and upkeep, it actually takes money out of your pocket. By this rule, it is a liability. Watch what happens to $1 in the middle-class cash flow. It enters the income box, then heads down into liabilities for a mortgage, car, or credit cards. Those liabilities generate monthly bills, routing the dollar up into expenses and off the board completely. Purchasing luxury items on credit creates a permanent cycle. You are forced to keep working just to fund those liabilities with your sweat and blood. So what actually belongs in your asset box? You want to list items that generate cash on their own, like rental properties, dividend-paying stocks, or automated businesses. When you acquire true assets, the cash flow pattern looks completely different. Here, the green arrow flows straight up from the assets box and deposits directly into your income box without creating new expenses. Kiyosaki advises treating every dollar in that asset column like an employee. It works 24 hours a day, generating more income to eventually buy your luxuries for you. As a young man, he kept his day job selling copiers for Xerox. But he didn't increase his liabilities as his pay went up. He used his excess earnings strictly to buy real estate. By sticking to the plan, his asset column eventually generated enough independent cash flow to buy a new Porsche. The assets bought the luxury, not his labor. This gives you a clear target to aim for. Financial independence is officially achieved the moment the green arrow of your asset income fully covers the red arrow of your monthly expenses. Let's take one more look at the top of your paper. It is time to audit exactly what kind of money is flowing into your income box. In accounting, there are 3 distinct types of income you can earn. There is ordinary earned income, portfolio income, and passive income. Ordinary earned income is what you receive from a standard job. It requires your continuous physical labor, and the government taxes it at the highest possible rate. Portfolio income, which comes from paper assets like stocks, and passive income, which often comes from real estate, are taxed much less. This portfolio income is the engine that drives the wealth of billionaires. Your ultimate operational goal is to use your current job to acquire assets, converting your highly taxed earned income into lower taxed portfolio and passive income. You now hold a literal map of your financial life. You can look at this grid and instantly tell if your money is cycling into your pockets or bleeding out. Changing the flow starts with small, deliberate actions. Your immediate next step is to invest in your financial education. Keep your expenses low, save up, and focus on acquiring just your first minor asset. To truly master this map, you will need to understand a larger framework known as the cash flow quadrant, dividing earners into employees, self-employed, business owners, and investors. Before you watch our next video, look at your income sources and figure out which of those 4 quadrants you currently occupy. because that starting position will dictate your ultimate financial destiny.